Can you hear me?
So the idea is, well, in a healthy trend, assets are going to align to reach the same targets. So let's say on one asset here, we are just trying to reach this target. It's simple as this. The other asset, it starts at the same area, but it actually retraces lower. And overall, what can we see happen here is we retraced to the same relative price level before we made the expansion move, and we reached the expansion at the same time. If YM and ES, like now, are propped up in premium, while NQ remains in discount of the range. So if we hop on the daily chart, we have, technically YM does have a two-stage SMT. I don't know, two-stage SMT like that. But in a healthy trend, the assets align to hit the same targets. If YM ES propped up in premium while NQ remains in some sort of relative discount, as you can see on the daily chart, whether you like it or not, if you're looking at this trend, we're looking at a very high time frame. We're relatively in the discount of the range. While if you look at ES, relatively in that premium of the section, and YM, well, we're past it. We're pushing past premium and creating new premium. That's why it would probably pull back as NQ pulls in this difference. Well, why? Well, that's because the assets, when they pull back, I'm just going through it now, as YM is going to pull back as NQ reaches the target, because YM will come back to what was relatively here. If we go NQ on this chart and YM over here, up on the daily. Turn this off. Well, you can look. We displaced clearly beyond. We displaced clearly beyond this high on Friday. This high from Friday, December 12th. And then look, if you're going Friday, why is it not? Usually they sync up. So yeah, look at this high and look at this sort of SMT compared to over here. Take a look at this SMT that we have. So just based off that, that would make me want to see this sort of higher price. But then when we go into the fact that this is all-time highs. So when you look at what was all-time highs for NQ, well, that's this high right here. That's this high right here. And now when I look at this high right here, what I am going to be seeing in my head, my dog came over, but is the idea for a pullback into this range doesn't seem so outrageous, because what would that do is, well, that would lead, my dog wants my attention right now. So what would that create is, as we have this level, which is all-time highs from NQ, we go into ES, and what was the previous all-time highs? Yeah, it was that same level. Right, so this level is going to be what I would see for NQ for YM to pull back to, as NQ is able to get here. Although I don't really think that's possible right now in that previous right now term. Like, if we're talking probabilities, I don't think this is very probable. This could happen, right? this is what's probable. Why? Why is this probable? Well, let's hop on the correct time frame. I'm marking too many SMTs, and we gotta make them one tick. What does this do? Why is this probable? Well, because this is a moving point for price. From here, price is able to decide, well, if it's going to go higher, it's going to inverse this to get higher. Same agenda is if it's going to go lower, why would it not come into the daily fair value gap that has swing points all across? Right? Failure swing, failure swing, failure swing, daily fair value gap. That's stacking liquidity. I want to see this get run. This gives us an opportunity from here, like I'm just saying right over here, where NQ is allowed to sweep the high and then trade lower. Right? We could get some SMT too, as these highs are already taken, but you get the point. And now what I really am strongly focused on, one second, is that if this SMT is going to hold, if that's going to be a real SMT between ES and YM, or NQES and YM, if this is going to be a real SMT, we have to expand away from it, like now. So obviously I'm not really looking for the expansion on YM, although what I don't like about this whole thing is that this is supposed to be the asset that is going to fall as NQ expands, because this asset needs to retrace. So I don't like the fact that this is the one that failed to do the sweeping, showing that it's technically stronger, although I don't know if that's really legit. This one technically shows weaker, also just more volume. But what we need to see is that this level holds throughout the day. This level holds. Or scratch that, I don't know why. I kind of go on a roadmap. Of course this level holds, that's intuitive. What is not is that this must expand away right away. Right, what that looks like, well, daily candle on ES and YM, or an NQ and ES, they're already expanding away pretty greatly. Right? So that does look good. Now, when you look at the average, one second, I'm gonna find the NQ. So the average daily range over the past 14 days is going to be 333 points. So if you look at that in any given way, I was like, what the heck? But if you look at that over here from our open, that means we really only have to this previous day's high to target for a relatively normal day. I mean, that would set us up probably the most optimal for expansion, like through the weekend, so Friday. So you can see that expansion here. Next day is just expansion as well, obviously maybe a smaller pullback. Now what would that look like though? Well, I still wanted to go over some of what that said, is because we're reading from, let's go with this. We're reading from this notebook right now. So let's look at this a little more. Expand back. Sources, scram, sources, bro, nobody wants to see you. So what we're looking at is now YM, my intuition for YM needing to retrace after being able to push past the premium of the discount is logical, but it requires specific signature. So YM being able to retrace from here, it requires something, I need to bring my computer closer. Give me a second. What it requires is reversal signature. Obviously, it's not gonna, if this SMT was SMT, you'd need to see immediate reversal. I mean, technically you are seeing that here, but let's go into it deeper. After 3 consecutive expansion candles into objective, like YM's push past all-time highs, the market enters a pause phase, consolidation. Simply being in premium is not enough for you to short. You must demand reversal. Expansion into a high met with immediate expansion away. Ideally 2-stage SMT to cap the range, right? And that's not what we're seeing on YM. Stupid thing, get out of my way. Where was that from? So in many cases, the leading asset, right, YM is going to consolidate or retrace slowly to create low resistance liquidity. Is that what we see? Do we see consolidation? Yes, we do see some sort of consolidation. Slow retracement to create low resistance liquidity, while the lagging asset expands rapidly to meet its target. That is what I would want to see. Remember, what I was saying is that sort of consolidation slash retracement back into this high. Why did I mark this high out? I was filming this earlier, but I just stopped it because my dog came over, and then I was like, okay, I'm gonna start again. Well, it's this high right here on YM is where NQ made its all-time highs, its current all-time highs, and where ES made its previous all-time highs. So my idea is that for NQ to run back up to here, the previous all-time highs, YM might have to retrace to here using this historical data. Why? Well, look, now we have YM that's lower in the range that set a new all-time highs at a different day. So now we can trade back up higher. So NQ will continue trading higher while YM might catch up to NQ, where we'll see. It's kind of like harder to explain, but it's just the assets are going to keep switching from lagging asset to stronger asset, and that's what allows the market to move, is because they're constantly catching up to each other, and you can catch that. So primary bias is going to be bullish on NQ. That's just what's going to make the most sense. On the 4 hour, that makes more sense. It's a lagging asset and has the cleanest objective, lowest in the discounted premium. Treat YM in premium as a reason for caution rather than immediate short. If YM begins to consolidate, it acts as continuation signature for the rest of the triad while they reach their respective highs, right? So if NQ or ES closes back below the protected lows, this one, I accidentally said that, but the reason I said that is because YM, this is a protected low. Right here, this is a protected low. So why is YM able to create a protected low here while ES didn't really and NQ didn't? Well, because in this 4 hour range, what I see is this is the protected low, swept lows, and that if price comes down here, this is kind of the reaction that we're going to go lower. Right, we can still run this liquidity and trade higher because it's not the protected swing, it's just the swing before that. Same for NQ. But I mean, it's not as strong, right? This, what we ran, what about this? I would like this a little bit more. It's like we already ran that. Oh shit, wait. So we ran it here while yes, didn't run it. I'll run it. And now we're running it again. We're running both of them. All over here, we failed to run the low that we previous ran. So this is a strength switch on YM. Technically, but I don't know if that's really clean. I'm gonna ask one of my friends. Because if you look for if you look into a two-stage SMT, one second. If you look into this two-stage SMT, an asset creates a high, runs the high while the asset fails to run the high. Now that high where asset A ran it and asset B failed to, asset A now fails to run the high and asset B now fails or runs the high. So what would that look like is triangle like a home and then like opposite. So that does make sense. Let's see. Would this be because that would make sense, and then that would pretty much just solidify the fact that we have to go higher. We need to go higher. Shit's a must, and right now, or else that would make this completely invalid. So that is pretty interesting. Let's just rip what I saw today. I mean, I know today wasn't that good, and I didn't trade again, so I'm only up 73 on my account. But if we go to 5 minute, so we're not really running the highs. I mean, yeah, so they say that's a strength switch too that happened. YM, which is the originally weaker asset, and then ES, the stronger, and it flipped with the most recent SMT swing on this. Alright, as you can see, I just wanted to make sure, I was asking him. And it does, right? Because YM over here, which is originally weaker asset, because it's falling down, right? It's taking out this low. While ES is stronger, NQ is stronger. They're not taking out the low. They're not that weak to go down there, and then it flipped. Right? Now YM is the stronger asset. NQ is the weaker asset. Doesn't really change the fact that NQ longs still look. NQ longs would be higher probability for me because they have the liquidity objective. Yeah, so let's go over the actual day. Well, look, YM is just a whole consolidator. Right, so let's just look at ES2, because ES is obviously, NQ and ES is where you're going to find pretty good SMT. So we have our initial SMT 735 with 830, and then we don't really have any other SMT. Here's something that I feel like most people don't see. It's that. Alright, so let's connect these and let's explain it. So this is that 9:40 a.m. candle. Oh, I'm sorry, I'm looking for that. Never mind. So yeah, we get that initial SMT right over here with ES being the weaker asset. I don't know what you really could have done. There was this change in state delivery off of it. But overall, I wouldn't really have taken it. And then price comes down here. I mean, let's look. What did YM do on this? I mean, so yeah, technically, look, YM runs the high right here. YM runs the high, well, obviously our asset over here fails to do so. So this is a two-stage SMT, but it comes with different because we had the two-stage over here with our main asset. So you could have identified shorts. Identified shorts are the setup, right? What I should have been doing is that as we're over here and we get that confirmation in a sense, and what previously was the weaker asset, as we weren't able to sweep the high, as NQ was able to sweep the high right here, YM failed to do so. Now we displace lower, we observe, we displace lower, same on YM. We're both consolidating in this range. And now, boom, look, you're watching, out of nowhere, YM bursts up above the high. First thing I should be doing, and I am doing at this time, is I'm marking out that high on NQ, on the assets that haven't ran it. I'm telling myself, wherever we're trading right now, within this, we cannot run this high. If we do run the high, it's an easy invalidation point. So that's why this is good, is you're guessing price is going to expand as price is in this concurrent area. Now, waiting for price to show the strength away, show that you have to move now. Like, there's no time. If you don't move now, you're not going to go lower. That's the logic behind it. So once price confirms it right here, in which we do close lower and we confirm that narrative that we're setting up, forget this asset is kind of what I'm thinking in my head. I know longs or shorts are happening. Obviously, I'm going to use this asset for potential liquidity targets, so marking out the obvious lows that are not those were swept, but marking out the lows just to make sure that we don't run it first. And look, once this happens, you shoot a market sell it, hop into the 1 minute chart. I mean, not market sell, yeah, that'd be stupid. But you hop into the 1 minute chart, and you wait for some sort of pullback. Whether it's price coming back into here, market sell it, put your stop loss right above here, and you just target 2R. 2 or 3R, whatever you want. And look, you get that. Now, there's so many entries here once you determine that bias. Look, so once we confirm it at 9:35 closes bearish. So let's get this locked in on the chart. 9:35 closes bearish. Right here, the close of this candle, or that's a 9:35 candle, so that means 9:40 closes bearish, my bad. So this is the close of that candle. When price comes back up in here, now we're on the 1 minute chart. You're still monitoring all of these assets. Look at that, we even have a PSP right here. As this asset runs the high. Yeah. But the idea is that right over here, starting to look for shorts. So right as we get this, I mean, you're looking for entries off this propulsion block. You're looking at for entries once price retraces back into this fair value gap. Realistically, this is when you use Dodgy's inversion model. You use it right here once we have that complete confirmation, we have that strength switch, and boom, that's when you get the model forming. And then off of here, you're positive on this, so you're taking it, putting your stop loss over here, and you're targeting just 2R. Now, let's say you entered in on the close of this candle, or let's say you entered in on the close below, so somewhere in here, the medium. You target 2R. You're in on the open of this candle, so you're in on 47.25 points. So I'm going to go to text. So 47.25 points. And multiply that by 2. So you say relatively that's $100 per micro risk. So you're saying that is now 200 per micro reward. Now what that looks like is with 1, remember it's 100, 200. With 2, that's 200, 400. With 3, that's 300, 600. Now lastly, with 4, that's 400, 800. Obviously you can see how that works, but you assess what your risk is going to be, obviously. But you have to be okay with losing them out. Now when you get into the idea more further on that, for any sort of trade, what is your prop firm? Well, if you have a 50K with Top Step, Alpha, Apex, Lucid, I think Apex is 47.5K, so 2.5K drawdown, but you get 3K drawdown. 100K, usually you'll get 4K. Now, what do you notice? Oh, and you don't trade your 50K or 100K account. You never did, right? You only trade your drawdown. So, the idea is, everyone tells you always, right, risk 1% of your account. And people go into that, and they say 100K divided by, or like, right? That's their idea. Now they go into this trade with $1,000 risk. You're done in 2 trades. Or I guess 3 trades. But thinking back, I put 3K drawdown, but a lot of these 50K accounts are 2K drawdown, right? Yeah, I don't know. But still, you're only allowed 3 losses. This is not how you want to be trading. Risk 5 to 10% of your drawdown. Because in reality, that is your account size. That is how much you're risking. You could put up the full $3,000. You can't put up your full 100K account. That's the logic. So here, your $1,000 risk would be saying you have a 100K account. So 100K account equals on average 4K drawdown, which equals, we'll be light here. So this is your real risk. This is what everybody is kind of missing, I think. I mean, obviously some people have it down, and obviously some people don't need it, right? This is only for if you really want to be consistent with your risk sizing. Because what does this do in this future? Okay, wait, give me a second here. Alright, so what I wanted to say was, what is the end goal of all of this? Why would you want to do this? Well, it's not just so you can trade good. You want to be able to have really good risk sizing and really consistent risk for one reason: when you scale. So if you're trading 40 fundeds and they're all 2 to 3 losses away from being blown, and when they're only 2 to 3 fundeds away from being blown, oh my god, bro. You will be in, out so much, and this is not what you need. You want to take, goal is 50 100K accounts, scale to 120K. That is your goal. How are you going to do that? Not possible. It's not possible to scale it if you're 2 to 3 L's away from being blown. Let me tell you why. People may say I'm wrong, but the idea is you're going to take 2 to 3 losses, right? You don't have a strat where the problem is, you don't have a strategy where the probabilities line up in a way that you don't take 2 to 3 losses. Therefore, you need to account for this, especially if you're going to try to scale, because scaling is going to be what will, it'll be mandatory that you have correct sizing and correct risk to reward. So this is not only for that, it's also just for the fact that keep account of your risk. That's the moral thing. It's the moral thing to do, to keep to make sure that your money is, you know what you're doing with your money, right? You don't want to be messing around with your money, putting it onto risk at random times. You don't want to be 2 to 3 L's away from losing all of your profits. Using this, you're going to be able to be a lot more sufficient and really grow in the market, because what does it allow you? Well, look at this now. you can take 10 L's and still have the account. I mean, pretty much. You can take 10 losses and still have the account. With fees, you're obviously not going to have the account. You'll probably blow it anyways. But the idea is the same. You can take 10 losses. And it's not like your profit's going to be that much smaller. Look, with your 400, you should only be targeting 2 to 1R. Although a lot of the time you're going to get higher trading JXT. So the idea is that you want to, this is $800 profit on the lower side, right? You can get up to 1,000 pretty easy. Yes, if you're risking $1,000 on one trade, you're going to get 2K back. So you only need 10 wins to get to this goal in scaling. But you're going to realize that prop firms aren't going to stay with you longer. This happens a lot where prop firms genuinely ban people because their risk is too high. They don't want to account for the probability that you make a lot of money. They'll rather just find something to get you out of there soon. So that's the logic behind this. That's what I plan to do this year. And I will do. I'm going to be a profitable trader. So getting back into it, this was the A plus trade of the day. Now let's figure out what we're going to do with this SMT. Because this is a banging SMT. Right here. Because with this SMT, you do want to see that immediate V shape, which necessarily I would not say that we're getting. It would be something you would want to see it like that. This was a slow grind to get to these lows. Although here it wasn't, and this was the asset that ran it. So it would need to be like these highs start going there now. So yeah, we'll see. I'm going to log off and see you in the morning.